Welcome to today's feature presentation, Trading and Investing Competency. Competency is generally understood as the knowledge, skills, and the learned abilities to perform a task successfully. When we talk about trading and investing, we basically specify the time of holding an open position. Trading shorter time, investing longer time. Behavior, action, and all of that is the same. So that also means you need a lot of competency and knowledge and all of that to trade short term. That's important. Put that in the back of your mind, and now we dive into the topic. My name is Thomas Barman. I'm your presenter today, and I want to make you aware of the risk in trading and that I'm here as a trader and educator, not as a broker, dealer, or financial advisor. To specify where the competency is, a rating would be a good thing to do. So if you rated yourself on a scale from 0 to 100 in the competency for trading or investing, where would you rate yourself at? That's more a rhetorical question. Let's dive into it. Top 25, that's where you need to be, and I'll demonstrate that to you to make money long term. Or if you're average at the 50%, there's a lot to learn for you to come to the top 25, because only when you achieve that, and it's achievable, trading and investing is learnable, then you'll make money. On the bottom 25, where you recognize there is an uphill battle and a lot to learn. And this is what we are here for. We want to share the different field of competencies that you need to put into your arsenal of skills and knowledge base to move forward within doing the right decisions in trading and investing. The frightening news, 76% of the retail traders are losing money. And we are not pulling that from thin air. We have a study that we conducted where we can prove that that is unfortunately a reality, but it can be changed. If you want to read more about why we say 76% of the retail traders lose money, and look, we are coming from a field of quantitative analysis, so we calculate everything, write me an email, contact@neverlosttrading.com, subject competency, and I sent you the study where we base that off that 76% of the retail traders are losing money, but that can be changed. What are the elements of the competency needed for successfully trading or investing? I put them here in a circular diagram for you, and we start out. First and foremost, you need a high probability system that, based on past performance, is above 65% with the predictability of directional price moves. Very essential, but not the only one. You see, you need risk limited strategies or risk limiting strategies. That is very necessary to prevent the drawdowns that really hurt a lot of the retail traders, because little win, big loss is not a successful pattern. But there's more. Action plan and financial plan. Action plan, when do you trade? How do you prepare? Financial plan, how often will you invest your money? How many turns do you want to achieve? And what shall be the end result of your action? Then high probability trade finder, or high productivity trade finder. So how often can you participate in opportunities? Some systems only have a few. We have systems that let you participate in multiple time frames for all asset classes, and that's going to be essential for your future endeavors in trading, because as more you invest, as more returns you make, as closer you come to your long-term goals. And also important, as much as the others, money management. How to prevent the drawdowns, etc. Or how do you constantly invest at least 80% of your money so that it starts working for you? In between those two, we'll need to define the risk per trade, and we want to work with you here in that presentation and after for defining all those elements of competency that'll make a difference to your trading and investing long term. A psychological pattern we all live with is called the Dunning-Kruger effect. It says that humans, by a psychological pattern, are overrating the competency in several fields. Like, I'm one of the best car drivers, I'm in the top 5%, just to give you an example. But in short, people's incompetency prevents them from recognizing their own ineptitude for getting certain things right to the level where it's needed. And we'll come to trading and demonstrate to you how we can build this up and bring you into the right direction. There is a pattern or curve that results the Dunning-Kruger effect. And so it builds the competency on the bottom and rates the confidence. And there you see in some areas we as humans tend with little competency to rate our confidence that we can make the decisions, particularly for things we don't do right yet, in a much different way. So with increased competency, we learn what we all need to put into our skill set and knowledge base, and with that we are coming much closer, bringing the competency that we have for a certain field in balance with the confidence that we can do the right thing at the right point in time. Back to trading and investing. If trading or investing were easy tasks, nobody would ever go back to work. But it's learnable. The competency curve pattern that you see here, in a short moment you will see, replicates a typical price movement we documented and published in our book Integrated Trading and Investing System. So now let's see how those two curves relate and what it can do for you. Here you see both curves side by side, the Dunning-Kruger effect, and on the other hand the never lost trading price move pattern, here an upside price move pattern. So you see pro trader initiated initial demand, kicks the price up, followers follow, flood supply by key holders, price goes down, and then there's a second phase to that. And the key will be that you recognize the first or the second phase of such a price pattern to invest. And this is what we show you in the continuation of that presentation. Our book, Integrated Trading and Investing System, is surely available either as a physical book or as a Kindle book at Amazon if you want to dive into that. So either write my name, Thomas Barman, or that title, and you will see the reference on a worldwide basis at Amazon. Let us now go step by step through that price pattern. So initiation phase. Pro traders identify that there is an asset, for example in stock, where they feel, based on their analysis, it is worthwhile to invest in. What happens is there's an underlying change in supply and demand that is measurable. So followers recognize that too, jump on the boat and drive the prices up. Yeah, next phase. So then what is happening is the gatekeepers, they recognize in their order books what is happening, so they flood supply, and with that prices start to drop again. Typical more supply than demand, prices drop, and then in the second phase it is carried out to the upside. So we want to be in phase 1 or in phase 2 in that price move, and want our system to tell us when we are ready to make the trade or do the investment. The pattern we share here is repeating itself for all asset classes on different time frames, tick charge, range bars. It always replicates itself, and that's important for us to have a systematic and a system of a repeating process that we can spot and follow. And with that, it's driven by recursion and shall be part of a dynamic system, and that's what we're going to propose to you down the road, to make that change and follow these patterns with clear-cut indications when to buy and when to sell. Let us share some actual examples. You see here the price chart, a daily chart of Apple. And at that point, by 92.90, you have the pro trader initiated demand. Here, highlighted in orange, it's a never lost trading top line signal. Early change in direction. Yeah, early up, early down is what we call them. And so there, the demand gets carried out, moves to the upside, followers come in. Yeah, so all right, I see there's something going on, I want to be part of it. But also you see here we specify with that little target how far that price move most likely is going to reach, and exactly where that was reached, supply came in, driving prices down, and then after earnings, bang, we jump to the upside and carry through, but again with a price signal to the upside. And your system, or our system here in that case, never lost trading top line, is giving you those indications in combination with that pattern, so that you can carry out the trades at the initiation phase or at the continuation phase, and that you always know at any point how far most likely will the price move be carried out until it will see a potential reversal and the threat for you to get stopped. And this is what we want to prevent. We want you to trade here and we want you to trade here. at the time of the recording here, December of 2020. So there you see, okay, there is some key points where you see a buy signal to the up or to the downside, and there's further combinations of those, and where is it gonna carry us. Let me just draw that little line over it again, and you see, yeah, initiation phase, driving up, rebalancing of inventories, drive to the upside, rebalancing of inventories, and another buy point to the upside. What will that do to your trading? Will you be assured to catch the right direction? Absolutely. Following this pattern alone will not make you the trader or investor that you want to be. There is several competency fields that we want to share with you and that we build up with our clients so that you're ready to strive for trading and investing success. Let us quickly paint those elements here in that diagram. First and foremost, price move indication. When is the initiation phase? When is the continuation phase of a price move happening? And how do I do risk limited strategies? Look, long stock just on itself is not risk limited. You take an unbalanced risk because stops can gap to the downside and that can happen quick. And so therefore we are working with our clients so that they have risk limited strategies. So no surprise is going to take them out of business at one point in time. Trade finder. So where do you get your trades from? How often can you participate, make your earns and turns in the field? But there's more to learn here. Trade repair when things go wrong, and that gave us the name. Never stop loss trading, but it was a little lengthy. So we help you to repair your trade, potentially turning a loser into a winner, or turning a losing trade in a little loser trade. So then when you win more than you lose, you have a pattern for success. Money management, how do you get each individual investment only to be a certain percentage of risk of your total portfolio, but on the other hand, how can you get at least 80% of your money invested, being documented with a business plan, action plan, and financial plan. So when do you trade and how often do you want to trade to achieve your goals? And account management, how can you do this from your 401k, IRA to your day trading account if you have all of those, or we can specifically focus on the one or on the other. But it's important to have a strategy for all the accounts and not leave things up just for being a surprise, in particular on your longer term investments for your IRAs and 401ks, and we show you how that can be done in our mentorships. Besides all those technical components that I just shared, there is one important component, the most important, that's you. You as an individual, how do you like to identify, evaluate, and limit your risk? And we work one-on-one only at your risk tolerance, what you can afford, what you want to afford, how often you can trade, what time you have available for making your decisions, your holding preferences. All of that goes into a specifically tailor-made program where we want to build up your competency so that you can do the right things in the market over and over. And for the preference of the asset classes, the time frames, we'll build a program with you that is a tailor-made suit for you as an individual with all these components considered that we just shared. As an algorithmic trading house, we built a function where you can see where you stand now, and the thing is, very many traders are with a losing proposition in the market base of their system, not risk limiting, not having good money and account management. All of that holds you back to go into the winning quadrant, and we are here to share with you how you can get there. Such, we want to help you to build the critical elements of competency for operating in the financial market. They are learnable and you can learn them. You can know how to execute those risk-limited strategies and to constantly invest, how to focus on the markets that best fit your personal scope and financial goals, how to produce gains, and how to repeat the process within doing what works and within leaving aside what did not. I could share hundreds of examples right now here on that scope because we are more than 10 years in business with that, and you know I have a couple of decades of experience in trading and investing, but I want to give you the chance. call us or write us an email to contact@neverlosstrading.com, and we get together and specify what you want to reach and how we can help you to get to your trading and investing goals. We are working one-on-one only, so don't miss out. And in addition to what I showed here in that presentation, I've documented everything on our blog so that you can read through the details of what I have and see more examples in front of contacting us and getting together with us to see what we can do for you for making a change for your future in trading and investing. Thank you very much for your attention.